Alrighty, first off, what's going on with ELF? What's going on with Honest? Why are these stocks moving up massively when the market's red? Well, here's the deal. You got to understand with a stock like ELF, okay? First off, was there any big news that happened in regards to ELF or Honest today? No. But in regards to ELF specifically, why does a stock like that just move 6%? You got to understand when you're dealing with ELF, you're dealing with a company that has what people would see as like a boring business model, right? They sell like beauty products, makeup, stuff like that, like big whoopee, like it's not the most crazy business model, right? But when you're dealing with the stock price of ELF, because ELF is a growth company, because they're doing big acquisitions, things like that, this stock is insane. Insanely volatile. Like it's not a normal like makeup company. Look at the moves of ELF over time, okay? First off, this was a big downfall of ELF here in this whole dramatic move, right? I want to get rid of Nvidia here, and I want to get rid of the S&P 500 so you guys can see these moves a little bit better and how dramatic they were, right? So ELF here is, we can call it $33, $34, drops all the way down to 21 here, right? Then goes from 21 in a very short amount of time all the way to 136. From 136 all the way down to 94 bucks. From 94 bucks all the way to 218. 218 all the way down to 158. 158 all the way to 212. 212 all the way down to 103. 103 to 140. 140 to $52. And I think the bottom here was actually, I think, 49 on ELF, by the way. Then we can say from $49 all the way to 130, right? And then the recent kind of drama in regards to ELF stock going down and then coming back. This stock's crazy, okay? It's just the way it is. Okay, this stock is a drama show. The moral of the story is ELF goes higher and higher as the years tick on, right? But the short term is it's a drama show. And I could take you all the way back to the IPO. It's been a drama show, right? Shortly after the IPO, the stock is around $31, right? And then when I bought my shares in 2019, I got those shares at $7, a little over $7 a share. So the stock's a drama show, okay? The business model might seem like it's kind of a relatively boring business model, but they have great growth. And since they're a growth stock, their stock price is crazy. And it's momentum. And you got to understand, a lot of people in the stock market they're not buying ELF stock to hold that for the next 5 years. A lot of people that like to get involved with ELF stock get involved because it's the momentum, right? And they look at it as a very attractive stock to either short at particular times, buy put options against at particular times, or you get into some gamma squeeze situations. Next thing you know, people are buying calls left and right on it. They're buying the stock because it's going to go higher and higher and higher. So it attracts a lot of traders, a lot of momentum, a lot of swing traders, a lot of people that aren't thinking about ELF's next 5 or 10 years. They're not thinking about ELF as like this company is going to become a cosmetics giant. They're thinking about, is the next move for ELF from 120 to 150, or is it from 120 to 90? That's what they're thinking about. They're thinking about the next $10, $20, $30 with the stock price. They're not thinking about the next, we can call it $300 in the stock price. Okay? So you got to understand there's different people with different goals in the market. And with a stock like ELF, it's like an Nvidia type stock. It's like an Nvidia type stock where it just has these dramatic moves. And why? Because it has insane growth rates it's put up in the past, right? And then all of a sudden the growth rates will go away for a little bit. Just like Nvidia does. Nvidia will post ridiculous growth rates for a few years. And then all of a sudden the growth rates drop down and all of a sudden they're like, what the heck? The business is flatlining or it's going down, right? And then all of a sudden they come back with these great growth rates. Same exact thing happens with ELF, which makes for a dramatic stock, which those type of stocks, you've got to really have that gut to hold these type of stocks, right? I can hold in a stock like ELF. It's no stress to me because, one, I've been doing this for like 17 years now, right? Two, I come from a family of gamblers, right? People that love to gamble on everything. Like sports gambling and all that stuff. I witnessed all that since I was a small child. So I remember even going to the dog track with, my dad and wanting to place bets as a 5-year-old on, I would always want to bet the two dog. We went to Greyhound Park. You'd watch the Greyhounds race around. I'd want to bet the two dog to show. And that was like my risk reward, because then you just had to come in top 3, right? I felt like I was playing it safe rather than trying to bet one to win. So I witnessed this my whole life. So for me to be in this game and have to deal with stocks that are drama shows like an Elf that went from 7 to 200, then from 200 down to 49, then from 49 to 120, that's nothing. That's nothing. You get more experience in the market. It's just another thing. And then the other big part of it is when you construct a great portfolio of 15 or 20 stocks, you're not so tied up into every single stock's, move here or there, up or down, right? Like I got so many stocks to worry about all the time, so many earnings coming out, like whatever it is, right? Now, if you're all in Alf, whew, you're on a roller coaster of emotions, because all of a sudden that stock's just tanking and it goes from 140 to 100 and you're like, oh my gosh, For me, it's just another stock. Like literally Elf's just another stock. Like Elf could go to 0 and like, okay, like it's not going to happen obviously, but it could. And I'll just be like, okay, like it is what it is. I got another 19 stocks that are doing just fine. So, you just got to let that stuff be what it's going to be. It's going to play out. And as long as you understand, I think the biggest thing that also helps you get over this, right? This fear of like these stocks that go crazy and like the drama involved and oh my gosh, there's so much volatility and the up moves and the emotions. A big thing that can help you immensely is when you actually understand fundamentals of companies, when you understand income statements, balance sheets, running projections on a company. That helps you think longer term. It gets you out of this short-term mindset of stressing about, the stock's gone down a certain amount, up a certain amount in the short term, blah, blah. It gets you to think bigger. When I think about Elf, I run my projections for what I expect them to do in 2026, 2027, 2028, and 2029. And I run that all on 1000xstocks.com. And then I run the PE ratios. And then it spits me out what my bull case is for Elf, my bear case is for Elf, and my base case is for Elf. And based upon my projections that I run, I'm looking really good on Elf for the next 4 or 5 years. And so whatever happens in the short term, whether that stock's next $30 is up or down, doesn't matter. If you had call options, it matters. Or if you're really tied up into this game, emotionally, it matters. But, for you guys that don't know how to run projections, do this with source. This is the key to being a confident investor and knowing if you're getting a great deal in stock. Pin comment down there, click on that, fill out a form. Let's get you in my private stock group. Let's get you access to 1000xstocks.com. Let's get you out of a gambling mentality and into a state of mind where you're able to make confident decisions and not be like all over the place, like, oh, this is so crazy, right? Because I saw there was a lot of people freaking out about Elf stock just a few days ago. Dude, Elf is up like a gazillion % just in the past 3 months. Like, come on. Like, how much is Elf up in the past 3 months? Elf's up 127% the past 3 months. And you had people panicking just a few days ago. I would see my YouTube comments, please talk about Elf. What's going on with Elf? Elf. Like, dude, the stock is up 127% the past 3 months. Come on. And this is why you gotta take things to a higher level. Stop gambling in the market and start making confident decisions and get out of the emotional state. The more emotional you get around this and don't know what you're doing, it's gonna cost you so much freaking money in terms of lost gains and in terms of literally you're gonna lose money. You're gonna make very bad decisions in the market that you're gonna look back and be like, what did I do? And the thing is, there's so much money to be made in this market. The public counts at 1.1 million, 3 years ago. Today, the public counts at $3.64 million. There's so much. There's literally hundreds of thousands and millions of dollars to be made in this market. Ridiculous sums from upside and downside moves if you know what you're doing. But a lot of people choose not to learn this stuff. And I'm like, okay, do whatever you want to do. You want to just throw money around in the market and gamble? Like, that's your life. Do what you want to do. I'm just saying there's a higher level we can go to here and actually learn how to do this on the right way. But that's up for everybody's decision out there. Okay. No, though this is an important subject today. Why don't you see me also sell out of half my portfolio, my full portfolio of stocks, right? Why don't I do that? Well, this is an important subject because I see this all the time, including back in April. I saw plenty of people, in March and April selling out of their portfolio, especially after Liberation Day. Oh my gosh, that freaked people out bad, right? And they thought the stock market was doomed and we're going to have this, I don't know, crazy crash. And we had a big downward move in the market. We had a major correction in the market, no doubt, from those February 19th highs to where we bottomed out the second week of April. And then we had a straight V-shaped recovery since then. And now we're sitting at right around new all-time highs in the market. So many stocks have gone up 40 to 127% in the past 3 months, right? Listen, you have two major issues. There's two main reasons you don't see me all of a sudden say, I'm selling half my portfolio, I'm selling all my portfolio. Two main reasons. First, it is such a tough call to make to call tops on the market. To call a top on the market, like I would say there's less than a 10% probability you're right. Less than a 10% probability. It's so insanely tough. There's been plenty of times in the market over my past 16 or 17 years, I thought the market, was kind of toppy. And then you know what happened? It broke to a new all-time high, and a new all-time high, and a new all-time high, and a new all-time high. And then eventually the market would break. But at the end of the day, like, my timing was not right. There's been so many times I thought, but the difference is I don't then go act on those. I don't say, you know what, I'm going to go sell out of 50% of my portfolio. You don't see me say, I got 3.6 million in the public account. I'm going to sell 1.8 million tomorrow. That's a dramatic decision. So one, you're probably not going to be right on your timing. Second reason, just as important, if not more important, when do you get back in? When do you get back in? You want to sell 50% of your portfolio, 75%, 100%, a huge number like that. When do you deploy the capital again? When the S&P 500, let's say you're right. Let's say you called the top and a week later, a few weeks later, right, the market starts to downtrend big time. Okay, that's amazing. You pulled the 10% probability out. You called it. Okay. When do you start buying back in? Is it when the S&P 500 is down 10%? Does it even go down 10%? Is it when it goes down 15%? Is it when it goes down 25%? You know how often the S&P 500 goes down 25%? Not very often. Not very often. It's extremely rare. So do you wait for it to go down 35%? You know how often S&P 500 goes down 35% peak to trough? Dude, you could be waiting 10 years for that to happen. So you're going to call a once in every 10-year event? That's legendary. Good for you. Bravo. But just understand it's not sustainable. There's a reason The Big Short, the guy from The Big Short, he doesn't make these calls anymore. He's actually relatively bullish and he just goes long the market, right? Because he's very of the understanding of when he called the great financial crisis, Michael Burry and those type of guys, that was a big call to make. And they were right. But you haven't seen them do anything since, right? And so it's tough, man. It's brutally tough. It's just so much easier to play the game the way I play it. The way I play it, I buy stocks every single week, right? When I worked at Quick Trip back in the day, I would buy stocks every 2 to 3 weeks, essentially, right? Because, I'd have bills and rent and all those sorts of things. So I would usually buy stocks every 2 to 3 weeks when I worked at Quick Trip. It wasn't every single week, right? Nowadays, I buy every single week, but I'm in a much better financial position now that I wasn't certainly back when I worked at Quick Trip, right? So that takes a lot of the worrying about timing the market out of the game, and you don't stress about it that much. And so for a lot of you guys watching this right now, you need to be consistently buying. If you cannot buy stocks at least once or twice a month, look at your income versus your expenses, figure out where you got to make adjustments. Do you need to make more money? Do you need to get a better job, work a second job, start a side business? What do you need to do? Or do you have an expense problem where you're just getting that lifestyle inflation, you're just spending everything that's coming in, right? Which there's plenty of people out there that have that lifestyle inflation. So you got to be consistently buying in the market, and that takes out the stress of worrying about trying to time the market because you're always buying. I was buying in April, right? Additionally, another thing you do is always keep some cash on the side of that. I always got some cash on the side of that. The only time I get super low on cash is when we've gone through a major correction or crash in the market. If we have a crash in the market in the next 6 months, okay, I got plenty of cash around. I'm ready to take advantage of that. So I don't need to worry about, trying to time in and out because I always got some cash around, right? And in better markets, my cash stacks a little bit more. And let's call it when the market's really in a bad shape and, stocks are getting slaughtered. Guess what? My cash goes really low because I'm deploying. That's what happened actually back in April. Actually went relatively low on cash back in April because I was just flooding money in the market, right? And the other thing is you can take some profits here and there. You run your projections on a stock and the risk reward doesn't look that attractive anymore, right? Not because the stock went up so much, but because your numbers say it doesn't make sense to be in the stock the next 4 or 5 years, that's when you can start to cut some shares of stock. But listen, just because a stock went up a lot is not a good reason to sell. Let me say that one more time. Just because a stock went up a lot, just because the stock market went up a lot, that does not make it a good reason to sell. A good reason to sell is when you look at a stock on a valuation basis, you run your projections, and you say, damn it, this is going to be hard to make money in the stock the next 4 or 5 years because of the P ratio it's trading at and what a fair P ratio is, and based upon my revenue, my net income projections, this is going to be tough. That's when it makes sense to sell and take some profits. But not just because the market's gone up a lot, not just because the stock's gone up a lot. Like, guess what great stocks do? They go up. And you know what they do after that? They go up more. And you know what they do after that? They go up even more. And more and more and more. And then eventually they have a kangaroo period, and eventually they have a crash. Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in? Or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com.
To that discussion about how the index is problematic, but you guys still think there are opportunities within it, right?
We do. And I think that, we're starting to see some signs of life in the small cap market, as you mentioned. It's been a good month to date for small versus large. We think that's a reflection of a number of things. There's some catalysts in the stocks, but they are extraordinarily cheap, and the underlying economic environment is quite good. And, I think as we set our sights on the Fed cutting rates in the back half of the year, you have a couple of tailwinds. So
I was going to say, big themed thematics, economic activity, right? You mentioned the Fed, and then M&A universe broadening out. Does that help?
It helps out a lot, and I think it's been very quiet this year, a lot more quiet than we would have expected. You've heard from all the bank CEOs, including ours, who was on TV with you guys. Thank you. That M&A is big backlogs are building. We expect that to kind of be materialized in the second half of the year. Private equity will start to move, and then we'll start to see more strategics. We've had a couple of strategic deals this week, but not as many as we expect.
Right. So you talk about catalysts within the area. Is it consumer first, financials first, something else?
I think consumer has been the kind of what has carried us to this point. The consumer came into the year as being a big question mark. Would they continue to spend? Where would they spend? And you even heard this week that they're starting to spend on air travel again. So I think you have to start to see a handoff to some other sectors. We're pretty encouraged about tech, software, semiconductors would be an area that I think can take a nice handoff. But also aerospace and defense has done quite well. And we expect to see some more IPO activity in that space because space is quite active. The private side of the space sector is quite active right now.
Yeah, even the big guys, GE today talked about getting that defense business going. We had leisure hospitality ETF hit an all-time high today. Individual names, I'm looking. There's some consumer restaurant stuff you like.
Yes.
Yeah. Cake.
Cheesecake Factory we like a lot. It's become a Gen Z.
Hey, let's go, baby. Love the cake. And by the way, this is why I love that everybody's addicted to spending every penny that comes through the door, because this is what helps the economy go. It just is. The fact that everybody wants to spend every dime on everything but buying a house, shoot, that keeps Cheesecake Factory packed all the time. That keeps Flower Child packed. No one has to go eat at the Cheesecake Factory. It's not like that's a necessary thing. No one has to go eat at Flower Child. No one has to go eat at North Italia, but they gladly do. And they line up, and they'll wait an hour for a table just to get in there. No one has to do that. Appreciate it, man. I love that everybody loves to spend every money. It just makes more money for all my companies. But Cheesecake, man, I can't believe, look at this. How far has Cheesecake come to get a mention on the closing bell? Come on, man.
Yes.
Yeah, cake.
Cheesecake Factory we like a lot. It's become a Gen Z hotspot. Want my youngest daughter to get a second job there. But I do think that there's some really good trends for traffic that will go on for Cheesecake throughout the summer.
Oh my gosh. Dude, no way. No freaking way. Man just brought up Cheesecake, and all he did was talk about Cheesecake Factory. That's not even the biggest story with this stock. That's not even the biggest story. The biggest story is North Italia and Flower Child and all the concepts they have coming behind that and the growth there. This proves to me that people still don't understand the Cheesecake story on Wall Street. Like, the first thing you should start talking about is not even around Cheesecake Factory. Who cares? Like, Cheesecake Factory is an ATM machine. Like, that's just going to keep printing money. Like, that is what it is. People love Cheesecake Factory. They gladly wait an hour for a table, and that's just, boom. Like, they put up their numbers. There's no story there. It's just an ATM machine of a business. The whole story with cake is around Flower Child, North Italia, and the other concepts come behind it. That's the whole story. Like, and this just shows me that people still, the Wall Streeters, they still don't understand the stock. And my gosh, when they start to actually understand everything that's actually going on with cake, look out, $100 incoming.
What explains that?
Piper will be an M&A story, along with just the general capital markets recovery, along with a pretty solid underlying, municipal bond business.
Voyager. I don't know too much about that one.
It's a recent IPO, very heavily on the space side. So you think about, like, as the space market starts to broaden out post, after SpaceX, they do a lot on launch vehicles and other things in space.
Do you worry about funding costs? I mean, at least for the time being, if the Fed does stay more patient than we think it's going to?
They've been high for so long that most of our companies have had to adjust. So I think that maybe there could be some companies at the index level that could have some problems. But for the companies that we own, we think that they're in really good shape. Rates have been high for almost 3 years, so it's, you think you get used to it after a while.
Right. There's also the added notion that as trade gets limited by tariffs and just overall tensions, that you want more pure plays domestically. That makes some sense, doesn't it?
That's a great tagline for small caps, and we love it because we do think the domesticity of the asset class, and having been through this tariff challenge before, many of these companies are really focused on the U.S. market. It costs a lot to go overseas. It costs even more to source overseas if you think about the challenges of 2017, 2018, the first tariff challenge, and then COVID. A lot of these guys really tightened up their supply chains. So we think that they are very focused on the domestic market.
Goldman had a great chart today looking at prime net exposure to semis versus software. We've talked a lot about how hardware has sort of stolen that mantle from some elements of software, but how does that play into a smaller mid-cap story?
I think we don't get the buzz from the biggest semiconductors that we all know drive the market, but there are a lot of these picks and shovels that are out there that really can help the connectivity, connecting these data centers together. We like a company called SciTime that does that. And there's a number of other companies that are kind of really broadening out some of the connectivity between the different sort of AI hubs inside a data center. You have to connect these things together to get the best use out of the different compute loads that you're putting on them. So there's a lot of picks and shovel semis that are out there in the small cap market that are benefiting from what's happening in the biggest companies.
Right.
Yeah, the ones that are making the most bank for the next, we can call it 2 years are for sure the semiconductor companies like NVIDIA, AMD. These guys are just making so much money for the next couple of years here, right? And they'll continue to make a lot of money even past the next 2 years. But if you want to talk about who's really going to make the big money the next 20 years, that's going to be plays on companies that are actually buying all these NVIDIA chips and all these AMD chips over this next few years. They're going to be the ones that really end up making so much money off of all this, okay? So that's important to remember. And by the way, you know what the best thing Cake could do for their stock price? The best thing Cake could do, honestly, is they got to start opening a bunch of Flower Childs in Manhattan and also some North Italias as well. So then at least these Wall Streeters can start to see it in their own playground and be like, because I feel like when Chipotle started to open in New York City, Wall Streeters suddenly started to get it because it was like right there in front of them. And they're like, oh, this Chipotle is pretty good. Like, I like this. Like, what is this company all about, right? And the funniest thing is like the same thing even with Shake Shack. Same exact thing. Shake Shacks were open in New York. Wall Streeters were able to get behind it very easily. And then if we want to take it a step further, even recently with a company named Cava, Cava's in New York City as well. And people are able, all these Wall Streeters are able to go there and see it and like, I like this place. And they pay some crazy valuation. If Cake wants to really accelerate the stock price, start opening Flower Childs in North Talley. You probably won't get best return on investment from those locations because Manhattan's so expensive to open restaurants. But it'll give them a lot of visibility with the Wall Streeters, and then people will be like, "Who owns this North Talley? Who owns this Flower Child?" And next thing you know, they'll look into it a little more and they're like, "Wait, Cake owns this?" And they'll start like, "Oh man, you got to put it right in front of their face."